Rotation is one of the most important events that takes place in the stock market. Rotation occurs on very large levels. It occurs in the smaller time frames. The ability to be able to identify and act on and protect yourself from the effects of rotation is a very important skill set to have. And that is what we're going to talk about today. Welcome to Power Charting. My name is Bruce Fraser, and let's get started with the subject of rotation. First, a couple of announcements. Very exciting. I want you to know that the Wyckoff historian, Stella Asoba, who is writing articles on Richard D. Wyckoff and doing incredible research on his life, is going to be a guest on Power Charting. So we're hopeful that this will be next week in our next episode. Keep track, and I will make announcements on Twitter at RD Wyckoff and let you know for sure if we can get this done by the next Friday, the next episode. Very exciting. I hope that Stella can become a regular contributor to Power Charting. Also, we are currently in the middle of a special 3 webinars for $30 special at Wyckoff Market Discussions. And for those of you that really enjoy all things Wyckoff, join our community. We meet Wednesdays 3 to 4:30 Pacific time, and this is an opportunity to just delve deeply into the Wyckoff methodology. Roman Bogomazov and myself and our members all get together. So go check that out. We're in the middle of this program currently, but it's still an incredible bargain, $30. You'll get one more live webinar, and then you have access to the recordings of the prior two. So please join us. Today's agenda. We are going to start with a current market chart study. We're going to look at the Nasdaq 100 and the S&P 500 intraday. The current environment is quite interesting. We want to look at the point and figure charts and also on the vertical charts and see if we can get some idea of where this declining volatility could stop, at least temporarily. Then we're going to get into our rotation case study, where we're going to talk about 2 representations of the market on rotation and how to do that, and then finish up, if we have time, with some bonus charts. Okay, so here we are with the Nasdaq 100. This is a 2-hour vertical chart, and it's through October 3rd. You can see here that, and we have actually shown on prior episodes of Power Charting, we have shown this area of distribution here. I should set up my highlighter. Let's do that. So this area right here, we looked at, did a wonderful job. We took point and figure counts, and they counted right down into this area here. So now we've had what appeared to be a substantial reaccumulation in the intraday and a jump out. So we got the jump, had a gap, came back and tested, had a backup, and then we had an up thrust that did not quite make it to the prior highs that were set in July. Now, why is this important? This is important because with an accumulation of this magnitude, this size, we did get the jump, we did get the move out, produced a profitable trade, but what we would have preferred to see was some kind of a pause here around the level of the highs, potentially having a sign of strength before pausing and then building a reaccumulation for another move up. That didn't happen. And this is the reason that we're tape readers. So In this particular case, what happened is that we had we're calling this a buying climax, automatic reaction, up thrust, secondary test, and then the sign of weakness that occurs here is a very big and important clue, because then after the sign of weakness, which breaks the support line, we get two last point of supply rallies, which are weak. And these rallies do not get up to the resistance area here or here. I guess I'll draw those in. And in fact, there's another sign of weakness here, another last point of supply that goes up and slightly up thrust the prior LPSY right at the end of the quarter. And so as soon as the new quarter starts, we have a market that, look at this, in September going into the end of the third quarter, we have a push up to the prior highs. Doesn't make it, but still there's enough buying power to push prices up into the end of the quarter. And then as the quarter comes to a complete end on September 30th, October 1st, there's a change of character. And this change of character takes down the Nasdaq 100 pretty sharply as of today. We're going to look at a point figure chart, because once we get that sign of weakness and that last point of supply that produces the breakdown and out of the structure, we can take a point and figure count. Okay, so with that in mind, let's go and look at the point and figure chart. Okay, so here we can see on the point and figure chart that we have three counts. So we have a count here that is the smaller area. I'm going to go back to the prior chart and just show you this is this area right here. Okay, so that is our more conservative count. Counts down from the high 79.56, and the count line 78.60 counts down to 76.32, 75.36, which is an important count, an important move, trading opportunity on an intraday basis. Now, we did 15-minute point and figure in conjunction with a 2-hour vertical bar chart. So we've talked about this in the past, but I just want you to know that sometimes use different time frames when you're looking at the same data, comparing point and figure and vertical charts. So here we see the breakdown, sign of weakness, attempt to run up. Here's our up thrust, which is an LPSY, and then a wholesale breakdown of the support area, which we'll draw right across here at 77.46. Breaks down, and as of this morning when I'm recording this, which is Thursday, now this is only through the second, by the way, we're below the 75.36.60 area. As a matter of fact, I'll go back to the prior chart. You can see we were at 74.90, and I believe we were trying to rally. There was a tail at the time, so we're probably above 7,500 at least at this point. So it could very well be that we're getting an overthrow of these two counts. So get this, here is our higher distribution count, here is our redistribution count, and they match, they equal each other. Okay, so this is two pretty good places to expect some kind of a pause in here, maybe something akin to a redistribution, or maybe it's something better than that where we get a reaccumulation, because notice this, we're getting a still, without the wholesale breakdown, we still have higher lows developing throughout this whole structure. So that is potentially encouraging. Okay, so we will keep an eye on this. There may be an overthrow of the 75.36 area, which is a complete match on both these counts. Then we have the entire count, which is this yellow box, which the count line here is at 78.03, and then the high again is 79.56. But this count across here is 41 columns, one box reversal method. Box size is 1908 because we're doing ATR scaling. This gives us a count down to 71.74 to 70.21. So quite a bit lower, especially considering that we are around 7,500 on the Nasdaq 100 at this time. So this is generated a pretty big count. So this support area here is going to be very interesting to watch, because this may produce a count for another redistribution count for lower prices. This may not occur at all. It may just keep falling straight down, which happens a lot when you get markdown. So when you get a good markdown, you can expect that it could just keep going and going. But if we can get these two counts to hold here and then get some kind of a pause that we can evaluate for either accumulation or redistribution, that will be very interesting to watch. So stay tuned. Okay, so now let's turn to the S&P. So two counts. I want to show you this count, which is an accumulation count, 25 columns across here, ATR scaling, 15-minute time frame, one box reversal. And so you can see here, why did I take this count? I can hear people asking that. So let me get a sip of coffee because I think better. You can see here that on this last point of support, where this green box stops on the right, and we count from right to left, you can see that this is the last pullback before the mark up and out of the accumulation area. It could be that this count could be taken also, but we take these in bite sizes. Here we can see this is a very legitimate count. This is a pullback and a test of this low, and then from there it's marking up and out. So we take that count. Well, look what we got. We count, and where do we count to? We count right to here. The reason that we count to this low is because this low, there was no good automatic rally off any of these lows on the way down. And so this low produces the first important rally that shows that large informed buyers are putting bids under the market. And you can see that because of the response to this one box breakdown. You can see this run up here, and then there's a pause. This is a sort of a redistribution for another move down, and we go down for a test, and then of this low, and then this test, this low here, and so and drives prices out of this structure. So this is a very good count to take right to here. And look what it does. It goes right into the range of the highs, 29.99 to 30.26. Okay, so now we're looking at a distribution count here, 34 columns. We're counting all the way across. You can see the structure is very similar to what we had in the Nasdaq 100, with signs of weakness, rallies that fail, and we get a count here. Now let's see, the count line here is 29.85, 29.86 rounding out. So down here we can see this count takes us to 27.90, 27.56.66. And so a ways to go. Currently, this is as of yesterday, 28.85. And so you can see and where it is for yourself, and you can even make this chart. So this is a count that produces a substantial decline. Keep in mind that we still have higher lows throughout here. So let's look at this chart, which is the same counts we took with the Nasdaq 100 in the S&P 500, and we can see here that this count at the peak, which declines out, where it declines out of that structure, we counted 29.25, 29.11, and here the redistribution count goes 28.98, 29.18. Pretty darn close. They are close enough to call it a confirmation. And so we have since declined through that area, but if it turns around, in volatile declines, they do go through their counts, but they often snap right back up into the count area. So we'll be looking for that, always keeping in mind this big count here, because it may just, if there's a lot of supply and sudden selling, it may just give up the ghost, just keep going and going. So we have to be really on our toes in this environment right now. Okay, so if we get this, this could be really good, because this could set up good redistribution trades, or possibly even some kind of a rally phase. So yet to see, we got to see how this unfolds. Okay, so and here is just a chart. This is through today, actually. It has rallied subsequently since this period. Where's my little thing? Okay, so here you can see it's already come back up some, but a very volatile day. And so if we can see this get back into this 28.98 area, that would be a sign that those counts want to work. Okay, and so that's 28.98, it's just right about there. Okay, so here's the Dow through yesterday. You can check that out and do the analysis on this if you care to. Now let's get to our subject at hand in the time that we have left. And so this is the whole notion of rotation. Rotation is such an important concept, and I want to encourage you to go look at Julius de Kempenauer's RRG tool in StockCharts.com. It's a really good tool. Can be set up to be very sensitive and catch these shorter term rotational events, which are important. I'm talking here about like the really big rotations, the rotations that are coming at the conclusion of multi-year advances, multi-year declines. And so what I'm doing is I'm using, in this case, two ETFs that represent two different things that I believe represent the two rotational focus points going forward. So here we see the S&P 500 dividend aristocrats. What are they? And the symbol is NOBL. You're looking at a weekly chart. This is high quality S&P 500 companies. They pay dividends. Each company in this index, in this ETF, pays dividends. They have paid dividends consecutively for 25 years or more. There are stocks in here that have paid dividends for more than 40 years. They grow their dividends. So they have grown their dividends for 25 consecutive years. So each year, no matter what the economic environment, these companies are so good, so economically strong, that they've been able to grow their dividends. Okay, so here you can see that this is a great surrogate for the dividend theme in the market. You can see that for 2016 on, the relative strength has been basically sideways. And so these stocks, not surprisingly, have performed with the S&P 500. They are the S&P 500. So you can see this uptrend has been basically a market performing uptrend that's occurred over this period from 2016 to the middle of 2018. Something really interesting happened in 2018. We remember the fourth quarter, which is right here, of 2018. The market just thoroughly got roiled in here. You can see, in fact, that the aristocrats went down in this period. But look what happened to the relative strength. The relative strength got into gear, jumped out, and started to outperform. Change of character. So an important change of character occurred in these aristocrats in this period, which put the aristocrats into a relative strength uptrend. They went from being market performers to market leaders. Rotation. This is important. This is a big event. And look at the volume in here. Look at how the volume has come to life. So the volume is showing that there's been institutional interest in these dividend producing stocks. Now, they never put up a sign and tell us, hey, this is what we're doing. This is how we're shifting our strategy, is that we're starting to focus on this different theme. Well, what was the theme that was in place before? Where were they emphasizing their investment themes prior to this shift into the dividend producing stocks? There is a rotation here. Well, what is it? So we have to become detectives and figure this out. Look at this beautiful uptrend that's occurring, and the uptrend in the relative strength. This says that the aristocrats are the aristocrats of the S&P 500 now. They are the darlings. They are the leadership. Emphasis is on dividends. Emphasis is on income. And so what, if emphasis here is on income, what are we unemphasizing? This is very important. So let's go look at the Internet Index Fund, which is FDN, First Trust Dow Jones Internet Index Funds. This ETF is entirely composed of these Internet Index stocks, which have been the leadership really in the market going back as far as the beginning of 2015. So you can see the relative strength is kind of the moving average is kind of down to here. Well, so for 1, 2, 3, 4 years, the Internet Index Fund has been profound leadership. And look at the this relative strength buying climax right here. So my penmanship is not great, but let's look here. I'll clean this up in a minute, but look what happened. There's right here at this relative strength acceleration, and we have, as a matter of fact, if you go back and look at these blog posts, I started to talk about the FANG stocks here in June 30th and September 19th of 2018, and this is mid-year. So here's June 30th, right here, right there, and the fourth quarter, and we were talking about the distributional top here and the possibility that FANG could be losing its relative leadership. And so notice what happens. There's distribution across here and a large decline. And so this decline was quite dramatic. Now remember, at the same time, the dividend, well, let's just go back and look at it. This same period right here, you can see that the relative strength in the aristocrats got very strong, which showed that there was a turn of emphasis to the dividend stocks and the high quality dividend stocks, and away from the growth names, which had been in favor for a really long time. So I'm making a mess, so let's clean this up. Okay, so now you can see here that a small distribution produced a pretty dramatic decline, 145-ish down to about 105, a little, maybe 107. So pretty big decline here. We call this a change of character. This decline was the most dramatic decline in this chart. This is just some bad data right here, right along there. This decline was the most comparable, pretty steep. It occurred very early in the uptrend. This decline is occurring late in the uptrend. Then there's an attempt to rally, and the rally goes back to the prior peak where resistance is in play. This is a buying climax. So anytime we see a buying climax, a return to it, we expect there to be profound resistance, because the only people that have the ability to drive prices down like this, that can command this kind of volume, is the composite operator. And so they have begun actively selling growth. And so, and this isn't just confined to these internet index stocks. We're just using this ETF as our surrogate. So here we can see this big push up, and now we're turning back down. Well, I've taken a point and figure count of this area, which is right here. So this area right along here is counted right here. It's traditional scaling, one box reversal. This is just a trading count, but it's a whopper. So this count goes up to 150 right here. Count lines at 140, call it 140 even, counts to 100 to 90. So that's a substantial decline that goes slightly below this low right here. And then this whole thing looks like distribution. So we have, and very important is, look what the relative strength did. We had change of character decline in prices here that broke down the relative strength through the long-term moving average. And look, it stayed largely above it all the way through this dramatic uptrend. Then we have a rally attempt, and the rally attempt shows that the relative strength can't even get back to the prior highs. Well, up here on price, it does get to a new high. Relative strength does not. Upside non-confirmation from relative strength. Big clue about change of character. So the big CO types are starting to reduce their exposure in these stocks. My contention is that they are hugely overexposed to the stocks in the Internet Index Fund, and it will take them a very long time, and they have to compete with each other to get out. The thing about and you can see this chart here by going back and looking at those old blogs. So I did an analysis of this distribution area. But here I want to show you, this is the list of the stocks in the FDN First Trust Internet Index. And so this is a very interesting list to go through and look at each chart. So I encourage you to do that. So here you can see, here are in yellow the 4 FANG stocks, and there's one, the other A in FANG, that is not in here. So Amazon, Facebook, Google, Netflix. And then there's one more that is not in the list, and I recall it being in the list before, but portfolios do change. And I think that this is the best looking stock, the best in class of all these stocks is the one that's not in here that I can see. I'm not seeing it, and that is Apple. And so Apple's been acting quite well. And so we're in a situation here where the FANG stocks are starting to lose steam, but the whole theme is potentially losing steam. So here, with the time we have left, we have about a minute. I want to show you this. This is just doing a relative strength. NOBL, FDN, makes a chart. This goes back to 2014. Look at this big downtrend. This downtrend is FDN in the denominator. When the trend is down, that means that the denominator is leading. And so you can see here that the decline is the leadership of FDN over NOBL. But now look what's happened. We have a base in this relative strength line. We have a jump up and out of the downtrend. We have an accumulation type structure. This is relative strength, and it's simply using the bar charts. And you can see that we've got a dramatic jump up and out by the theme in the numerator, which is NOBL, the aristocrat theme. So have a look at this, really study it. Thank you for being here. I'll see you next time. Hopefully Stella will be with us. Watch the Twitter feed, and we will have another episode. Have a great week, everybody. I'm so glad you were here.